Hello, good morning to all. Welcome to today's Daily Dose of Market Insights. I'm Kelvin Wong here, the Senior Market Analyst of OANDA Asia Pacific. So happy Friday. Finally, we come towards the end of the week, and I would say there are 2 more weeks before 2023 ends. So today will be Friday, the 15th of December. So before we start our Daily Dose of Market Insights, as usual, the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, and as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so as usual, before we jump into that short-term technical analysis outlook on the broad-based asset classes, ranging from the major benchmark stock indices, the major FX pairs, and as well as gold and WTI crude oil price, we take a look at the current situation in the global macro space. That means, i.e., we have a review of what happened yesterday, key data, and how does it impact the various asset classes from a medium term to a longer term perspective. So let us start with yesterday. We do have another 2 more major central bank decision before 2023 ends, which is the Eurozone European Central Bank, ECB, and as well out from UK, the Bank of England. So both of these 2 central banks came, the monetary policy decision outcome, I would say, came within market expectation, where the ECB maintained their refinancing rate at 4.5% and BoE maintained their policy rate at 5.25%. Over here, there's BoE, then ECB at 4.5%. But what's shocking, not shocking, what's in contrast, I would say, with the current thinking of BoE officials and Eurozone officials versus the Federal Reserve officials, that means the US central bank's officials, as you all know, that they actually have their meeting a day before with this dovish pivot guidance, was they're actually looking for an increase in with the prospect of more interest rate cut in US in 2024, as implied by their latest dot plot. So there was an increase from 3 potential projected interest rate cut in 2024, and markets start to price in twice 6. Versus what initial 2 interest rate cut in the forecasted path, earlier forecasted path in the previous dot plot that was released in September. But however, for BoE over here is that the officials thinking are still rather stubbornly hawkish. Why? Because if you look at the current situation over here, is that the current vote itself was split by 6-3. Yes, even though they keep interest rate unchanged, the policy rate unchanged at 5.2%, but there's a 6-3 split vote. That means 6 majority, 6 of them wanting voted for a hold. That's why there is a hold yesterday. But there are 3 very hawkish dissented that voted for a hike instead. And also during the press conference overseas, is that their boss, Governor Bailey, said that it's still some way to go in his fight against inflation. That means they are still very stickily, stubbornly maintaining that higher rates for longer period fight. Okay, so that actually causes the dollar to actually fall off much further because of the interest rate differential between US and the rest of the world starts to get narrow due to that much more dovish Fed guidance. So that actually kind of reinforced the what you call it, the yield premium shrinkage of US Treasury versus the rest of the world. So dollar kind of weakened yesterday, especially against the euro and the sterling as well. All right. So if you look at ECB language as well, during the press conference of Governor Lagarde, they're actually saying rates cut later than market bets. That means they're also having that slightly more hawkish vibe, not so hawkish as BoE, but still reluctant to be as dovish as the Fed. So all in all, we could see that if you look at the FX market as per se, so this will be the 5-day rolling performance. That means every Friday it changes, 5-day rolling performance. we see across the board dollar weakness. Yeah, now during the Asia session, it started to consolidate a fair bit due to yesterday's steep rise in the euro dollar and the sterling dollar against the US dollar. So all in all I could see is that the bigger picture, if you look at the 1 month rolling performance, so that's more like a medium-term trend. The trend of the dollar still persistently remaining very weak, and also being supported by this US 10-year Treasury yield that continue to actually exhibit further weakness after it break down below the 200-day moving average during the Federal Reserve FOMC meeting day. And also, if you look at currently technically, there is still some more room to push on the downside rather than the upside towards the next support at 3.6%. So that's more from a multi-week perspective, because this is a daily chart rather than hourly chart. But however, due to the fact that the two other central banks, that means the BoE and ECB, sounding not as dovish as the Fed, so this give a bit of what I call cap on the recent risk-on behavior towards equity. So yesterday we see a bit of what I call it profit taking in the European stock market indices, and as well as the US market stock indices. The rally itself, the momentum gain is not as much that was seen 2 days or 1 day ago. So if you look at the momentum gain over here for the US market, what we could see now very typically, the previously higher beta Nasdaq 100. So Nasdaq 100 is viewed as a way that this is a kind of a more aggressive index that focusing more on a high quality growth company, which is the 7 mega magnificent stock ranging from Apple to Amazon. They actually yesterday gave up their earlier gains and ended slightly in the red, negative 0.15%. So that also translates to a slight little gain of 0.26% on the SPX. But however, the laggards benchmark indexes, which is the Dow Jones Industrial Average, positive 0.43%, Russell positive 2.72%. So what you could see over here is that from a longer term perspective, heading into Q1 next year, we are now seeing a bit of catch up by the lagging or the laggard benchmark indices. That means indices that's more focused on put it away that cyclical value and as well as indices that tends to be outperformed in the later stage of a major bullish trend. So right now we are looking at this kind of performance at this point in time, and also it's being kind of reinforced by this current contrasting monetary policy guidance that is undertaken by the major developed banks. That means, i.e., the Fed starts to tilt towards more on the dovish side of the story, but however, other major central banks are refusing to be as dovish as the Fed, as example being reflected in BoE and in the ECB guidance yesterday. And not forgetting over here is that next week, means i.e. on next Monday or Tuesday, we have the outcome of Bank of Japan, which is very likely they will start to actually give a bit of hint that are shifting away from a negative short-term interest rate policy as well. Okay, so something very interesting to look out for at the start of next week. All right, so with that, that is the big macro picture that I'll share with you all. That means that is more of a longer term perspective on what happened or what transpired yesterday. So now, diving down into a more of a short-term time frame, that's what I'll share with you on the short-term technical outlook chart. Okay, so now let's start with the FX market first. All right. So for FX market, we take a look at the euro dollar first, the European currency. So if you recall that since the start of this week, we do have a bullish bias on the euro dollar, which the market actually moved within our expectation and pierced up and hit that resistance that we mentioned earlier 2 days ago, which is around 1.098. followed by 1.10 level. Okay, so it actually hit this level yesterday. So now let me expand my screen so that you guys can see much clearer. Okay, so what we could see right now over here is that the RSI is actually right at a kind of a extreme overbought level. So this current overbought level of 82 is the highest since the 15th of November. But one thing positive in terms of momentum, that price action going to push higher, high. Your RSI also shipping higher. Oops. Okay, your RSI also shipping a high. Okay, your RSI is shipping a higher high as well, despite being a kind of a relatively short-term extreme overbought level. So what it means is transpired over here is that the current RSI, short-term RSI momentum reading as reflected on the hourly RSI chart over here in your screen or in my screen, indicating to us that the momentum remains intact in the short term because it doesn't has a bearish divergence. So right now, odds are more still skewed towards a short-term positive momentum. Okay, short-term, that means we're talking about 1 to 3 days over here, not 1 to 3 weeks in terms of technical analysis. But however, this is being in the relatively extreme overbought level, there could be a slight risk of a pullback taking shape, impending pullback taking shape coming into perhaps today to actually address or work out this current relatively short-term extreme overbought region. So the next near-term support to look out for will be at this area here, this former congestion zone, all right, at 1.093. Okay, so given the fact that this level here is a nearer term support level and it doesn't have much confluence of other elements, other key technical elements. So I do not want you to use 1.093 as my key short-term pivotal support for today to maintain this ongoing short-term bullish outlook. So I will tighten it slightly much lower, which is a higher level, below 1.093, which is at 1.087, because it confluences with more element, graphically, minor congestion, and upward sloping 20-day moving average that is turning up. And as well, if we do the Fibo retracement of this entire short-term push-up, it confluences with the 50% Fibo retracement. So I'll use this as my short-term pivotal support for today to maintain this short-term bullish outlook. Next resistance, 110.40, followed by 111.30. So what's 111.30 over here? Is in fact this graphical congestion zone from 21st of July to 27th of July this year. Okay, so all in all, still maintaining that bullish outlook, short-term bullish outlook as long as 1.087 tighten short-term pivotals, which is support holds. Okay, only an hourly close below 1.087 would negate this bullish outlook to kickstart a much more deeper corrective minor decline towards the 200-day moving average, and as well as this minor swing low area of 12th of December and 30th of December, confluencing at the support zone of 1.082/1.078. All right, so very similar movement, like I explained earlier, on the euro dollar is being reflected as well on the sterling dollar. So sterling dollar, if you recall, we do have at the start of this week, we do have a short-term bullish bias. So price action move within our expectation, hit the former minor range stop area of 29th of November and 2nd of December, breaking above it at 1.2730. So it does have a much more bullish momentum compared to the euro dollar. Why? Because during the minor corrective decline from 29th of November to this 12th of December, it still managed to hold above the 50-day moving average. Okay, it didn't break below it, and it just flirt around with the upward sloping 20-day moving average. So indicating to us that the momentum is much stronger than the euro dollar, and yesterday it kind of confirmed against with this much more stronger momentum due to that much more stubbornly persistent hawkish vibe that's being portrayed by some of the BoE officials, by having a vote of 6:3. Ministry officials are still in favoring of hiking interest rate in UK, despite the fact that we start to see evidence of slower inflationary growth globally at this point in time. So all in all, there could be a pullback coming into play, given the fact that the RSI also starts now to exit from a relatively overbought level, just exited. So positive thing, no bearish divergence. So potential pullback level could be at 1.2690. This is here slightly below the 1.27 psychological level, but I don't want to tight it so tightly. So I will use 1.2610 short-term pivotal support for today to maintain that bullish bias heading towards the next resistance at 128.70. So 128.70 is this 76.4% Fibo retracement of that previous medium-term decline from 13th of July all the way down to earlier October low over here, and as well as this congestion area of 28th of July to 31st of July this year. So all in all, still maintaining that short-term bullish bias on the sterling dollar, with the fact that as long as 126.10 hold, if we see an hourly close below 126.10, that means we will start to see another round of very messy corrective choppy movement towards 125.45/125 figure, which is corresponding with the 20-day moving average, 200-day moving average, pardon me, and the medium-term ascending trend line support that is in place since 1st of November low. Okay, Other currency, Aussie dollar. So Aussie dollar continue to be in an upbeat mood as well, or upbeat momentum as well. But bear in mind over here is that if you look at the daily chart, we're now approaching a key major resistance at 1.67, pardon me, 0.6790. So 6790 is a pretty key level. Why? It's also the upper boundary of this medium-term ascending channel that is in place since October low, and as well as this is a major descending trend line that is in place 2 years, close to about 1 year ago, 1.5 years ago, which is the 25th of February 2021 major swing high. I draw over here. Okay, so now we are approaching a key resistance at 6790. Yes, in the short term, we have still some more room to push up, at least for a 1-day perspective for today. So if you look at the Australian dollar, we will still maintain that bullish outlook, but we have a very tight key short-term pivotal support for today at 6670. Why? Because the RSI has really woke up from an extreme overbought level yesterday and now bouncing off slightly above the 50 level mark. So indicating to us that there could be a slight chance of in fact, there could be a slight chance right now of a revival of this minor short-term bullish momentum after yesterday's kind of a minor pennant-like triangle consolidation. So tighten 6670, short-term pivotal support holds, maintain bullish outlook, potentially looking for the key resistance to be tested at 6790. Okay, if we start to see a pierce up above 6790 today, the next resistance to look out for will be 6840/6870 in the first step. So what 6840/6870 is actually a Fibo extension cluster from here, and if we were to take another Fibo projection from the recent swing lows area, okay, as well. Okay, so now, and graphically we also see it at this level here. If I were to go down to this area, so if it's a conjunction previous we call it the swing high of 18th of July and 20th of July, closing at this level as well. So all in all, still maintaining that short-term bullish outlook with a tightened key short-term support at 6670. However, hourly close below 6670 negates this bullish outlook to see the continuation of this ongoing minor corrective push down or decline towards 6620, which confluence with the upward sloping 20-day moving average, and as well as the former minor swing high of 8th of December and 12th of December now turns into a pullback support. Dollar yen, so dollar yen continue to remains weak within our expectation. So price action yesterday came down, and right now it retested the former 200-day moving average, now acting as a pullback resistance at around 14230. Okay, 14230 over here. Okay, this 14230. So all in all, right, what we could see now over here is that given the fact that it really now start to shape this bearish reaction, and the price action on the RSI also managed to bank off from this descending resistance as well, right below the 50 level mark. So with that, I'll be much having a tighter key short-term pivotal resistance level for today. So the tighter key pivotal resistance for today will be at this level over here. So this will be 14330. Okay. Okay, so I'll be using 14330 as my key tighten short-term pivotal resistance for today. Still looking for a continuation of this bearish impulsive move on the dollar yen that is right now continuing is short to medium term downtrend that is in place since 13th of November 2023 low. Because why is it short to medium term? Because right now, if you look at the daily chart itself over here, it seems to us that momentum indicator right now is still pretty much bearish, still not showing bullish divergence. So potentially we may start to see the next main higher level support coming in at 137.65 thereafter. All right, so all in all, that means we're now seeing the short-term downtrend that is in place since the mid of November, now translating more into a kind of a multi-week medium-term we call it a downtrend phase as well. So for sure, a clear break below 136 or 137.65 will transpire to a start of a new major downtrend in the dollar yen. All right, so this 137.65 is pretty key in the coming weeks ahead, heading into the earlier part of earlier part of January next year. Okay, a breakdown below 137.65 potentially kickstart a multi-month major downtrend on the dollar yen. Okay, so this is a higher level that I want you guys to keep in mind. All right, so in short term, short term, we're talking about 1 to 3 days point of view over here, is that the next support level to watch out for will be at 139.20 first. In first step, if we start to see a breakdown below 141 level, which was last Thursday's low, the ex-post FOMC meeting low. Okay, tighten pivotal resistance 143.30, maintain that short-term bearish bias. Dollar yen, on dollar yen, only a breakout above 143.30 will negate this bearish bias to kind of see a much more substantial minor counter trend rebound to extend towards the next resistance level at 144.80. All right, so that's for the outlook on the dollar yen and the revised pivotal short-term resistance level. Okay, now that's pretty much sum up the FX market. So now moving on to the what do you see over here is that moving on to the stock indices. All right, so for stock indices, let us start the US market. So we know that Dow Jones Industrial Average yesterday outperformed the benchmark over here. So what we're going to do over here is that we will be using a tightened key short-term pivotal support for today on the US Wall Street 30 index. So this level over here right now, this zone, okay, will be my ST pivot for today. So this will be my short-term pivot on the Dow Jones Industrial Average or the US Wall Street 30 we call in our platform, given the fact that right now it's actually outperforming the higher beta Nasdaq 100. So this will be my short-term pivotal support level. Okay, so I tightened it from yesterday, 36.55. And so given the fact that it actually start to show trend upside acceleration after a breakout above this upper limit of this minor descending channel from 10th of November, yesterday it kind of consolidated and bounced off from this previous minor descending channel, now previous minor ascending channel upper limit turns into a pullback support. Here about time to sting. 36.977, 36.890 short-term pivotal support level, a tightened one, maintain that bullish outlook on US Wall Street 30, next resistance 37.455, followed by 37.800 Fibo extension cluster. However, a breakdown below 36.890 negates this ongoing short-term bullish impulsive up move to potentially kickstart a minor corrective pullback within a short-term uptrend that is still intact, with the next support coming in at 36.55 slash 36.520 over here. This swing low, the swing low of the Fed Fund FOMC day, we saw confluence with the lower limit of this minor ascending channel. Okay, so all in all, maintaining that short-term bullish outlook on the US Wall Street 30 with a tightened key short-term pivotal support at 36.890. Okay, Nasdaq 100. So Nasdaq 100 kind of pulled back yesterday, but the pullback yesterday managed to actually has this push up right above the short-term pivotal support level, the new one that we highlighted on Thursday, which is at 16,330. So no change, still using 16,330 short-term pivotal support level, still maintaining that short-term bullish outlook. In first step will be a test on the current all-time high at 16,770 as indicated in OANDA's platform. All right. However, a breakdown and hourly close below 16,330 will negate this short-term bullish outlook to kickstart a kind of a minor corrective pullback within a short-term uptrend that is still intact to retest the 20-day moving upward sloping moving average, which is confluencing with a graphical the former minor range resistance now turns into a pullback support at 16,160 slash 16,090. Okay, so that's the outlook for the US Nasdaq 100, still maintaining that short-term bullish outlook or uptrend scenario. European currency, German 30. So German 30 yesterday tested the tightened key short-term pivotal support level and managed to actually shape a bounce. So the RSI managed also to turn up right slightly above the oversold region. So still no change, 16,735 short-term pivotal support, tightened one, maintaining that short-term bullish uptrend or outlook on the German 30, looking for a retest at 16,910 for today. Okay, 16,910 for today on the German 30. However, a breakdown below 16,735 potentially sees the extension of this minor corrective rebound, a minor corrective decline or pullback scenario within a short-term uptrend that is still intact towards 16,590. A breakdown to below 16,590 exposes the upward sloping 20-day moving average, also now confluencing with a former minor congestion area, turns into a pullback support at 16,440. Hang Seng. So Hang Seng continue to be very continuing this uptrend move on the Hang Seng. So right now we are now looking for a test at the 17,160 level, the next resistance level, indicating to us there's this 50% pullback or 50% FIBO retracement of that previous push down from 16th of November to 11th of December low. So price action already push up very steep today. So with that, I will have a tightened key short-term pivotal support level for today. Will be at today's low at 16,020 level. Okay, so this will be my short-term tightened short-term pivotal support level for today on the Hang Seng Index or the Hong Kong 33. As long as 16,620 holds, potentially we may start to see a test at 17,160 in first step for today. So still maintaining that short-term bullish outlook with a tightened short-term pivotal support on the Hong Kong 33. However, if we start to see a breakdown below 16,620, then this bullish outlook will be negated to see another form of choppy decline to, in first step, retest 16,390 level. Okay, 16,390 level that was actually confluence with yesterday's swing low area as well. Okay, so still maintaining that short-term bullish outlook on the Hong Kong 33 index. So that pretty much sum up for the major indices. So across the board, we still has that maintain that short-term bullish outlook. Now, WTI crude. So West Texas oil yesterday cleared above the 70-20 upper limit of the neutrality zone and going to push upwards. So right now, it seems to us that momentum has started to pick up, at least in the short term. So with that, we do have a short-term bearish bias, a bullish bias, pardon me, tongue twisting short-term bullish bias for West Texas oil. So we will flip from a neutrality stance to a short-term bullish bias stand to potentially see a price action evolving within a medium term or within a minor counter trend rebound phase, with next resistance at 74.10 after a breakout of 72.40 that was tested yesterday during the US session. So 74.40 is in fact the former minor swing high of 4th of December to 5th of December, and as well as the downward sloping 20-day moving average. So flipping to a short-term bullish bias as long as 70 level short-term pivotal support holds for today for West Texas oil. However, a breakdown below 70 figure level will negate or invalidate this counter trend rebound scenario to see another push down to retest the major support zone of 67.55/67 figure. Gold. Okay, so for spot gold over here, we will still maintain that short-term bullish outlook yesterday, as we have on Thursday. So what I could see that price now going to consolidate right at the first resistance level of 2038 that we highlighted yesterday. So there could be still a chance of a potential pullback to test the 20-day moving average at 2017. So because this level here is not so much of a graphical element that is supporting it, so I will use slightly the 2000 psychological level, which is the 1997. So 1997 will still be my key short-term pivotal support level to maintain that short-term bullish outlook. The next resistance in first step to watch out will be at 2067. So watch 2067 graphically minor contraction zone, and as well as if you do the FIBO retracement of that from that current all-time high all the way down to the low of the 13th of December, it will be close at 50% retracement as well. Okay, so all in all, what we're now seeing is the start of a new potential impulsive up move within this medium-term uptrend that is still intact on spot gold XAU/USD. All right, so that's sum up the short-term technical outlook for today. So what other data to look out for today is that before we go into the data, I want to share one more data that's out today. Is the Japanese data, key data, services and manufacturing. Yes, manufacturing came below expectation, 48.3 versus 47.7 below previous month one. So it's still in contractionary mode. But however, the services PMI reignite bullish momentum on the services activity in Japan, up 52 from 50.8. And if you look at the trend of the services, this preliminary are not live flash one for the month of December, it starts to actually hit up a tree, broke the previous month of October high as well, okay, at 52. So some signs of what I call services sector activity resurgence back in the Japanese economy. So that potentially could support further yen strength as well. Okay. And other economic indicator is from China. So why that actually explain why the push up in the Hang Seng Index earlier on today is because we do have a mixed data out from China. yes, retail sales disappoint year on year. They came in 10.1%, below expectation of 12.5%. But however, industrial production beat expectation 6.6 versus 5.6%, and also slightly above the previous reading of October at 4.6%. So if you look at the trend of industrial production in China, it starts to actually inch upwards after those slew of targeted fiscal and monetary policy stimulus enacted by top policymaker. So right now is in fact the fastest pace of growth since February 2022. Okay, so a bit of mixed reading right now in the China economic data space, key economic data space. So that kind of lead to a short-term bullish momentum. We call it sipping back into the Hong Kong indices. Okay, so that is the key data that was released slightly earlier on. So what other data to look out for today? We do have a slew of flash PMI data out from Eurozone as well. Services data from Eurozone and so manufacturing in UK as well for today. And going to the US session, we do have also flash PMI release from the manufacturing and services side of the story. So for today, it's more like a release of flash PMI data, manufacturing services for the month of December across the major developed countries from Europe, UK, as well as US in the later part of today's evening session at 10:45 p.m. So with that, that pretty much sum up for today's daily dose of market insights. So I wish you all a great weekend ahead. Have a great day ahead, and we shall speak again on next Monday. Thank you.